A very good morning to you. Let's take a look at some of our business news for this morning. And for that, we're joined by Wayne McCurrrie from FNB Wealth and Investments. A very good morning to you, Wayne. Thank you for your time this morning. Perhaps let's start off with the market movements. Overall, looks like it was positive and partly because of what is expected to come out of the Feds as far as interest rates are concerned. But what are the other factors that have impacted market performance?
Well, yesterday was just about the USA and inflation. That was the whole story there. The US inflation number came out a lot better than expected, especially the month-on-month increase in both headline inflation and core inflation. And this is really good news because it means that interest rates worldwide are now probably at their peak, including South Africa. So I don't think we'll see an interest rate increase next week. And the next move is down in interest rates because the inflation demon seems to have been tamed now, and our market just shot the lights out. It was like 2.5%. Some of the shares, the platinum shares, were up 10% on the day. The rand strengthened significantly. It was trading at about 18.70. It's now trading at about 18.20. So yesterday was really, really good news.
And talking about the rand, it is on a winning streak, as you mentioned now. Talk to us about some of the factors that are affecting that.
Well, look, the rand's very, very oversold at these levels. I mean, very typical for a commodity-based currency is when you get a commodity down cycle like we're experiencing now, the rand weakens materially. But of course, the down cycle is probably followed by an up cycle. So I think over a 2-year view, we're going to see quite a bit of rand strength, and the rand could easily go to 17, or let's say against the dollar on a 2 to 3 year view on a commodity upcycle. So who knows what's going to happen in the shorter term? We've got elections next year, but in the medium term, the outlook for the rand is actually very, very positive.
Is this, Wayne, an indicator of softer fuel prices for the months of December, January?
Probably in December, yes, we'll see a softer fuel price because the oil price has come down and the rand has strengthened. What happens in January, I've got no clue shorter term. But longer term, we will see some moderation in the fuel price, but mainly because of a stronger rand. Because as commodity prices increases, the oil price is going to increase as well in dollar terms. So we could easily see the oil price going over $100 US a barrel within the next year. But hopefully the rand strengthens by much more than what the oil price goes up by. So we will probably see a moderating rand oil price over the next 2 or 3 years as well.
And quite interesting looking at storage, their results. They're literally the only specialist self-storage real estate investment trust in the country. Their results looking quite good. They're also looking at expanding. Talk to us about their performance.
Look, this is a really unique company, and they are benefiting from the structural change that both we are doing in South Africa, but it's a worldwide phenomenon. People are downsizing. It's very expensive to have a big house nowadays. They're downsizing. They take all their junk and they put it in the storage room and they never go visit it again. But maybe equally as important, companies aren't carrying big footprints anymore. It's expensive to own retail space or even office or office space as well. So when companies need excess place to store goods for their, let's say they're building up for the Black Friday sale or for the December rush, they actually also hire out storage units and put all the excess stock in there because it's temporary. You don't have to pay rental for the whole year if you only need it for 3 months of the year. So this is a structural change, and storage, very big operators here in South Africa and in the UK, they're benefiting from this, and they get very, very high occupancy rates. I mean, they've got extremely high occupancy rates, so it's a very good business.
And how competitive is that market?
It's very fragmented, and that's one of the benefits also that storage has got. There were many, many storage units owned by mom and pop operations, individual companies owning it, both here and in the UK, and they're just going out buying all of these small operators and putting them in benefits of scale because they've got all the systems, they've got all the operations, they know how it works, and they can offer a decent price to individual operators that quite frankly can't really compete with them.
So theirs really has been a strategy of acquisition, and that seems to clearly be working for them.
Yes.
So let's take a look now at Liberty 2 degrees. We have over the past seen a number of companies delisting from the Johannesburg Stock Exchange, and they have done this too.
Yes. South African shares are very cheap. They're possibly of the cheapest I've ever seen since I've been in investments. And of course, when shares are cheap, you want to buy the companies, and that's exactly what Liberty is doing. Liberty's 2 degrees is operating at a big discount to fair value. Now, Liberty 2 degrees was listed out of Liberty. Now, Liberty is buying it back, but they're buying it back simply because the valuations are just too low. And we've seen this, as you said, with a good few South African companies, and maybe we'll see a few more coming because, as I mentioned earlier on, the assets really are cheap.
So talking about the JSE, what has really been behind this? I think mass delisting is not really accurate. I think it's perhaps too much on the other side, but it has been consistent and it's noticeable. What is behind that?
It's purely the valuation of the shares. As I mentioned earlier on, these shares are really cheap, and when things are cheap, people want to buy the shares. So, until our market recovers on the back of a commodity upcycle and some revival of growth in South Africa, which will happen over the next 2 or 3 years, then you'll get some new listings coming on the markets. In other words, when shares are cheap, people want to buy them. And when the valuation of the market goes higher, people want to list new shares. So we are naturally at this stage of the cycle in a delisting phase, and we'll probably see a few more. And once again, it's simply the assets are cheap and people want to buy them.